Yep, after what was a typical turnaround Tuesday, as they say, we are looking at a pretty mixed picture across equities here today. So Japan seems to be resuming that decline as well as Australia. But, you're still looking at markets like Korea, markets like Taiwan that are opening up that are still seeing a little bit of positivity and still continuing on with this rebound. So there's a lot of nuances here right now. I think we're still kind of fleshing it all out. But look at the Topix Banks Index. So at least we're continuing to see that benchmark there, or I should say index, continue to gain this morning for another day. So certainly it's looking like there's not a whole lot of conviction out there. In fact, I think we can't quite say the meltdown is over just of now either, right? You take a look at what we've been seeing when it comes to swaps, for example. I mean, Treasuries basically yields have spiked up here overnight. We did have a solid auction of the 3-year. We're tracking, of course, what swaps are saying as well, right? They're paring back some of those really deep rate cut bets that we had talked about just a few days ago. In fact, we were talking about 150 basis points of rate cuts. I think we're back to around 105 now, according to what traders are really pricing in. So there's a little bit more, I guess, we're getting off of some of these extremes, maybe some more calm coming through, but still not quite out of the woods here right now. You take a look at when it comes to Brent markets as well. We're still seeing some downside on Bitcoin here this morning. And flip the boards. It's interesting to watch how FX volatility plays in all of that as well. With, dollar yen, of course, has seen a second day of weakness, which is helping at least stir this calm. But really, you look at this, the spread between the 3-month and 6-month. This was from our Sebastian Boyd from our MLive team. And you're still seeing FX volatility quite actually elevated here, even after this turnaround Tuesday. So is it really about the growth fears, the risk assets, selling off that's really driving this FX volatility? Is there an element of election fever as well? He thinks this might be part of a ladder as well, given that we are seeing more, we're counting down the election, of course, and we're going to talk a little bit more about Harris choosing Tim Walz as her running mate for the Democratic ticket as well. But overall, you take a look at how the China Open is looking up and shaping up to be a pretty decent session here. Keep in mind, in the past 5 sessions, I believe the CSI 300 was one of the only major stock markets to actually gain amidst all this chaos, right? So can that continue, this relative safety play in China? 214 for your Chinese 10-year yield, and we're at 716 levels for dollar China Bell.
Yeah, and I think really the direction of where Chinese equities go today does also depend on the data that comes out, because we've got those export numbers that are due in the next hour or as soon as the next hour. Growth is seen to be accelerating, but it's really that base effect that comes into it. Is it going to be something that really helps GDP growth accelerate? Perhaps not. There's still that call for more stimulus. CGB auction also to track. We've got sales of 2- and 5-year bonds on ticket this morning. EV stocks as well, one to be watching at the open here today, given you've got perhaps further restrictions coming through from the White House on Chinese EV software that's being used in vehicles in the US. Of course, very high tariffs already in place on Chinese EVs. So perhaps more seen as a deterrent rather than actually impacting sales there right now. HSCEI, one to watch around its 200-day moving average, and also watching for pricing on an IPO. Black Sesame looking to be at the bottom end of the range. So perhaps not a great day for that either, Yvonne.
Yeah, we'll see how it all plays out. Obviously, there's a lot going on, and we'll talk to Stephanie Leung, now Chief Investment Officer at investment platform Stashaway. It's been a manic few days. Yes. It seems like we've settled a little bit, but how durable do you think this bounce is right now?
Yeah, I think if you look at kind of the magnitude of the volatility over the past few days, it has indeed been quite significant. Right? If you look at kind of the VIX, which is the market's preferred measure of the U.S. market volatility, it spiked up to as much as 65. And the last time we've had the 65 reading was back in COVID, or even before during the GFC. So indeed, there was a lot of dislocation within the markets, not just the FX market, but also kind of bond market, equity market, etc. Now, if you look at kind of the flows, a lot of this has been driven by forced selling from risk control funds or CTAs. And a lot of these selling has been done, but it's not done yet, right? So I think over the next few days, we're going to see some continued selling pressure from these funds, which could still pressure markets. However, if you look at kind of the VIX index itself, one very good indicator is the curve of the VIX index. It has reversed on Monday, and historically, I mean, a reversal has been pretty decent for predicting kind of better future returns. So we think perhaps we've seen the height in volatility already, but still a bit more choppy markets.
But I guess the question around what really drove this, and it was these expectations of recession that were building and a Fed misstep and earnings that perhaps weren't quite as good as had been expected, that really hasn't gone away either. So is it that can also continue to drive that volatility here? Because are we setting up for a recession, or are you seeing slower growth?
Yeah, I think the biggest debate right now is there a recession, right? Should the Fed actually do an emergency cut to prevent a recession? Now, I think there is some weakness in sort of the July data. If you look at the PMI or the ISM, I mean, it has weakened. But if you kind of look at the commentary of what the PMI says, basically, I mean, firms are holding back on their investments because of election uncertainty. So I think there's a bit of that as well, given that right now it's sort of 50-50 between like Trump versus Harris. The market hates uncertainty, and this is going to drag on for the next 90 days, if not beyond. I think also if you look at the jobs data, there's a bit of like temporary impact from hurricane as well. So July data was exceptionally weak because of that, and I wouldn't be surprised if actually August data come back much stronger when these kind of temporary layoffs are back.
How bullish can I be on treasuries right now? How much I should be leaning into this trade?
Yeah, I think if you look at Treasury, it's actually quite interesting. Right now, of course, even with the pareback, Treasury market is saying 105 basis points cuts by the year end. But if you look at kind of track record of the bond market this year, it's been horrible, right? If we start the year, the market was saying, oh, the Fed should cut 6 times. And then inflation data actually was stickier, which we sort of like kind of advocated back then. By mid-year, the market is saying no cuts at all. And we were saying, oh, okay, that was actually quite excessive. And now it's kind of back to kind of 5-6 cuts. Yeah. I think the reason why the bond market has been quite extreme is because of the illiquidity of the market, which causes like kind of heightened volatility. If you look at the MOVE index, it's still fairly high. It's about 100. And that is kind of, that exacerbates some extreme moves. So I think we should kind of take a grain of salt into how much to read into from the bond market signaling effect. And I think given like kind of what we've seen so far, it's not conclusive yet that U.S. is going to recession. Slow down for sure, but it could be a Goldilocks as well. So I think it's too early to say.
It has really been that major theme, though, that's been so dominant around U.S. exceptionalism, and that sort of seems to have given up a little bit. And there's been that sort of recurrent theme that whilst the West is decelerating, the East is rising, or at least that's what Chinese brokerages are pushing. But where do you see as the market that's most likely to perform best?
Yeah, I think if you look at kind of the sectoral split, of course, like the first year was kind of dominated by AI and tech, and that drove the U.S. market to like 18% kind of ascend before the correction started. On the other hand, in China, I mean, growth is coming back. It's still quite benign, right? And I think if you look at sectors like property, I mean, those are still kind of decelerating. So I think right now, if you look at kind of where the different sectors are, AI is, of course, I mean, still powering a lot of things, but valuation is still also quite high. And I think if you look at China, also, the recovery is still quite benign. So I think right now, what's more interesting is actually the more cyclical parts of U.S. We've seen a bit of that sector rotation happening in July. Now, of course, given everything that's going on, that's kind of died down a little bit. But I think as we go on to the second half of the year, I wouldn't be surprised if like small caps or cyclical sectors actually start to outperform in the U.S. again.
What is the advice to clients now? Is it more about, continue to de-risk given the volatility, or are you actually seeing dip buying or appetite for that right now? And what's a good bargain? Yeah, so I mean, we're actually sent out an investor letter to our clients yesterday and the day before, and I mean, what we're telling clients is that these corrections are quite normal. So the speed was actually quite surprising, but if you look at the magnitude of the correction, S&P corrected 10%. Yeah. And I mean, typically S&P corrects 10% every 12 to like sort of 14 months. So even during bull markets, so it wasn't like really out of I guess expectation that the S&P would correct. After all, I mean, still like with the correction, S&P is still up double digits for the year, and so we think that fundamentals still remain strong, and we advise our clients to actually use the correction to add on dips. You mentioned about the forced selling from some of these hedge funds and the like. I wonder how much is the magnitude of these moves is due to the unwind of that carry trade. I mean, are you seeing a clear pathway of people who are borrowing yen to kind of buy U.S. tech stocks, for example? I mean, do you think those things are related?
I think to a certain extent, because all these are sort of momentum trades, right? And a lot of the funds have these momentum trades on, and when they reverse, I mean, these funds are forced to kind of cut, like CTA by definition, risk control funds also by definition. So I think actually one spiral into the other, given that there's a lot of excess in the market and a lot of very, very crowded momentum trades. I mean, all these trades kind of come undone at the same time. Now, that doesn't mean that these trades are over. I think, for example, AI is a theme that would run for the next few years. The problem is that, okay, the easy trade is done, right? The easy trade that everybody has been piling into NVIDIA, everybody knows about the story. So what's left, right? Not a lot. And I think as we move into phase 2, it becomes a little bit more complicated, right? Is open source models going to win, or is OpenAI going to win? A lot more questions. And I think that is going to make the story a bit more nuanced. It doesn't mean that it's not going to carry on, but it may not be the same companies.
Beyond the market volatility, of course, the other hugest source of volatility has been the US election and how it's been absolutely upended. And the big news today as well is Kamala Harris picking her VP. But how much do we need to look into election risk and prepare for it in the next 90 days or so? Or do we just need to really focus on the fundamentals instead in markets?
Yeah, I think that's a great question, because if you look at kind of the market, basically it peaked right after the attempted assassination attempt of Trump. And that was when the probability of Trump winning spiked up to 75%. I don't think it was a coincidence. If you look at kind of the market this year, it actually has been steadily rising with the probability of Trump getting elected. And I think basically, if you think about where the market is pricing right now, 50-50 chance of Trump winning versus Harris winning, which is probably the worst outcome for markets, because markets actually hate uncertainty. And right now, there's this uncertainty about, who's going to win. Not just on election day, but I think any kind of results will be quite a close call. So that means that there could be further disputes after the results are out. And it really depends on how much that drags on, right? If it drags on for a few more months, as we've seen in the PMI survey, companies are saying we're holding back to investments because of this uncertainty. So the longer it drags on, the longer it potentially can impact on fundamentals. And that is going to kind of slow down the economy even further. So I think this is a big risk that we're going to watch in the next 90 days, and the market is going to pay attention to it.
All right, Stephanie, thanks very much for your time this morning. That was Stephanie Leung there, Chief Investment Officer at investment platform Stashaway. And actually, US election, that is the topic coming up ahead as well, because as we said, Kamala Harris tapping the Minnesota governor, Tim Walz, as her running mate, seeking not only to broaden the Democratic ticket's appeal to working class voters, there's also questions as well over his connection to China and the many years that he spent travelling to that country. But we'll have more ahead. This is Bloomberg.
All right, we're just marking the fix here this morning. Not a whole lot to tell you about here, but we're still talking about 713.86 levels from the PBOC here today. But yes, we're still holding on to some of the bit of the strength that we're seeing across the currency. 716 levels now for your offshore rate, Bell.
Yeah, and also tracking what's been one of the big stories this morning, US Vice President Kamala Harris kicking off a critical campaign stretch aimed at putting Donald Trump on the defensive in key swing states. Harris took to the stage for the first time with her running mate, Minnesota Governor Tim Walz, who she calls a fighter for the middle class.
We got some work to do. We need to move to the general election and win that. And to all the friends, listen, we also need to level set. We are the underdogs in this race. But we have the momentum, and I know exactly what we are up against.
All right, our news desk editor, Jill Desis, joins us for more. And Jill, maybe Walz is someone who's less known on the national stage. She is very popular in his home state. one of the things that stood out to me is he was one of the first people to call Trump weird during this news cycle, which seems to have really picked up amongst voters. But how is he likely to be perceived, do you think?
Yeah, well, if former President Trump's pick and J.D. Vance was more of a doubling down on his base, what Harris has picked in Walz is much more of a coalition-building pick, right? I mean, she's a prosecutor from California, obviously does have that level of visibility given that she's the current vice president. Maybe Walz isn't very well known nationally, but he's much more of this, like, working families kind of guy. He seems very, he's got that, like, sort of Midwestern dad energy, very, like, down-to-earth, that kind of thing. And he also brings to the ticket a lot of different issues that Kamala Harris might not be necessarily strong on. He served in the House of Representatives and was really focused on issues involving agriculture, and veterans as well. As governor, he's also really focused on, again, families, this idea of providing child tax credits, free school lunches, that kind of thing. So it does bring a much different energy to the type of energy to the ticket. And it also, again, that Midwestern idea, he's governor of Minnesota. It seems to be an attempt to kind of reach out and build coalitions within those states to try to capture votes there.
Yeah, the Midwest dad, I love that. And he likes to do some dad jokes, too. But let's talk about his ties to China, because, it's interesting. People are starting to dig up some of these comments that he's made from decades ago. But he's one of the few that we've heard of that really has kind of connections with the mainland.
Yeah, this is actually really interesting. So in, I believe it was 1989, 1990, he was a teacher in Guangdong province, so southern China, and actually does have that experience of living in China. I don't think that we've really seen somebody on the ticket like this since, the Bush era. I mean, actually having somebody that has, like, these much stronger ties to China. So, yes, I think that again, brings something different. So when you're looking at a candidate like, Tim Walz, who is a governor, so he's got this much more of this, sort of domestic feel, not really that level of foreign policy experience. The fact that he's worked in China is, something that is different that it brings to the ticket. And then I believe he also got married on the anniversary of the Tiananmen Square crackdown. So, I mean, that does bring, I think, maybe a little bit of controversy. We'll have to see how that develops, I think, in the next few days, and whether there's any response from China there.
Yeah, meeting the Dalai Lama and the like, too, which may prove awkward, as our headline suggests. Jill Deese is there. Thank you, our news desk editor, showing us the latest here when it comes to, of course, U.S. politics. Later on this hour, Amy Dacey of the American University Sine Institute of Policy and Politics is going to be joining us. She previously advised President Barack Obama and Senator John Kerry and served as CEO of the Democratic National Committee during the 2016 campaign.
All right, and China as well, due to release its July trade data in the coming hours. Some more, let's bring in our China correspondent, Min Min Lo. And Min Min, we could see a bit of a pickup in exports. Question is, under the hood, does that really suggest that we're getting better numbers and China's economy improving?
Yeah, I mean, last month we had that record high trade surplus, and this month's trade surplus is expected to remain at around the same level, close to around $98 billion. Last month was $99 billion. Export expected to increase to close to 10%. Imports growing at over 3%. You can see on the screens there. And this really underscores the idea that China is still relying heavily on industrial production and exports to lift growth. But there are a lot of uncertainties. If Trump wins the election, there could be more tariffs on Chinese goods. If there is a U.S. recession, there could be less demand for Chinese exports. And then there's also the idea that many of these exporters are not necessarily making a lot of profits because of the price war at home. Many have been slashing prices, and that's why if you look at the total value of goods exported, that has only crept up by 0.4%. Inflation is expected to remain soft this week. The data is coming out on Friday. We're expecting producer prices to contract for a 22nd straight month, and that's why some economists have now revised down their growth forecast for China.
And we're hearing more about this bond rally, and really a subsidiary of the PBOC is also asking some of these rural banks to limit their exposure to bonds.
Yeah, so this is the Jiangsu branch. Jiangsu is quite a wealthy province in East China, close to Shanghai. It has asked its rural banks to limit their risk in bond holdings and not to buy large quantities of sovereign bonds when the PBOC could be selling it. And these rural banks, they tend to be smaller but more risk-taking, and some of them could have more than a quarter of their assets in sovereign bonds. And separately on Monday, the PBOC also asked market makers to submit an usually detailed report of their bond positions and their transaction volume. So taken together, this is a signal that the PBOC could be continuing to push hard on potential interventions in the bond market after it first did so on Monday, selling about 22 billion yuan worth of 10-year and 30-year bonds after the benchmark yield dropped below 2.1%. So we know the PBOC still have quite a bit of firepower left because they said they had hundreds of billions of yuan of bonds that they are prepared to sell. So that's something to watch in the coming days.
All right, Min Min, thank you, Min Min Lo there, our China correspondent with the latest on all things China. Of course, we're going to take you through the trading day as well and what to expect. Of course, we're still counting down that trade data as well. And yeah, we'll continue to watch some stocks here this morning and how they're going to fare amidst this sort of rebound that we're seeing across these markets here. Hang Seng pre-market is up. We are up about 0.1%. This is Bloomberg.
All right, about 5 minutes out from the open of mainland markets trading this morning. Hong Kong as well, you're seeing looking for some pretty modest gains when we get to the session opening. Really, it's been China acting as sort of that defensive play, a bit of a safe haven, pretty much uncorrelated with what's going on in the rest of the world. Question, of course, is what do we get out of those China trade numbers later, and is that going to dampen the enthusiasm, perhaps?
Yeah, does it shift back to the worries around the domestic economy? That certainly is going to be the key question as well. Some analyst actions to tell you about today. Yum China race to outperform Macquarie there. This is after their earnings really did defy some of these price wars and came out with some decent profits as well. So we're watching that. Goer Tech cut to reduce at HSBC. And Alibaba Pictures read a new buy at Citi. They're saying the best stock and really the company to capture Gen Z's strong spending on entertainment despite this weak macro environment. So stocks to watch, of course, we talk about a New Oriental. That's one to really mention here today. Upsizing the share buyback to $700 million. JP Morgan saying this special dividend plan is, quote, welcome and likely to get approved. We're seeing there a pop of 14% on the stock. Also, Yum China continuing that rally post earnings as well. We got the open coming up next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down to the open of markets. And yeah, you can say maybe that this rebound has continuing for another day in Asia, with the exception of markets like Japan, which continue to see sentiment is quite fragile. But at least here in Hong Kong and Greater China markets, we have seen that relative safety play being played. And here you go. You're seeing Hang Seng modestly higher by about 1% in the pre-market there. Futures are still pointing positive. And yeah, despite, we saw a bit of retreat when it comes to the renminbi. I mean, it's still a stronger kind of currency here, despite all this volatility as well, just given what we've been seeing the moves in the yen today as well. So certainly there's a lot on tap. We're still counting down to trade numbers as well.
Yeah, exports really the one to be watching here. We could see that expansion, but when you look under the hood, there's still concerns around the growth outlook. This is the open here we've got for mainland markets this morning, and we are seeing the CSI 300 coming online fairly flat so far, perhaps just a slight bit of weakness that hadn't been so much indicated in futures. Again, it is that countdown to the trade numbers, what we get out. Is that going to be enough to really tell a story around the growth story and a bit of conviction? Perhaps not, and that could lend a bit of, or dampen the enthusiasm around equities. Chinese stocks, of course, they have been seen as almost a sort of safe haven over the past couple of days, really uncorrelated with what's going on in the rest of the world. I guess if you are seeing a bit more of a pickup into other markets, it again detracts from the appeal of Chinese equities, even though the valuation's looking so cheap. So that's the state of play there for mainland. Let's switch on, take a look at what's happening in Hong Kong as well today. The start of trade here, looking a little bit more positive, watching the Hang Seng Tech Index in particular, around 0.6% to the upside. Tencent, Alibaba, you've got gains of around that 1% mark for both of those major players. A couple of stocks to watch as well, because we are keeping an eye on certain sectors. EVs is one of them today. Again, you're seeing these stocks a bit under pressure here so far. This is really the story of the White House administration, and we're hearing that they could be looking to further restrict sales of Chinese vehicle software, so putting limitations on that. We already have big barriers in place anyway for Chinese EVs in the US market, so this could be seen as a further deterrent to companies there and giving US automakers more of time to catch up. Danny Lee is here to talk about that, so we'll get more details. But let's also switch on Yum China, another name we're tracking this morning. Big jump yesterday. It's continuing into the session today. We had earnings that beat estimates. We've also seen the company being raised to outperform at Macquarie, their price target. You can see at the bottom of the screen. Quick check as well on some IPOs. We've got lockups that are expiring. Huahong Semi, one of those that's down around 35% since its IPO, and then also Chengdu Sino, microelectronics, and that stock a little bit under pressure. We have those seen it gaining, Yvonne, since its IPO.
Yep, we are checking, of course, Cathay Pacific shares here this morning. We are rallying for another day. We're up about 1% as we count down, of course, to those earnings coming out. There's also a Bloomberg scoop as well that we're learning that Cathay is close to announcing a plan to buy dozens of twin-aisle aircraft and is currently favoring Airbus. Let's bring in Danny Lee, our Asia transport reporter, joining us now. I mean, we talk about earnings in focus. They're about to buy more planes again. Tell us both. What's going on?
So on the scoop side of things, yes, they're about to cap off what is going to be the end of its biggest spending spree on jets in a decade, and they're looking to add dozens more jets. They're favouring Airbus at the moment, according to people familiar, and so this will really help the Hong Kong expansion and the growth that they'll be going through over the next several years, particularly as Hong Kong adds a third runway as well. So this is good for Cathay as they look towards the back of COVID and look ahead. And fortunately, as they look like they're going to be making more money again, this all helps their funding of expansion and investment.
And separate to Cathay, we've just seen those EV stocks coming online a bit under pressure so far. White House could be looking to put further restrictions on EV technology from China. Just talk us through it and what that really means, given, as I said, we don't really see many Chinese EVs being sold in the US.
No, right. And so what Washington is trying to do here is to tackle the fast emerging growth area of autonomous and internet-connected vehicles, and this is something that very much the Chinese EV players lead in because of the innovation that they have, and China being the world's biggest EV market. And so President Biden is looking to, as soon as this month, move on US sales of Chinese vehicle software. And so this is to really address and tackle the idea of security concerns, and particularly where Chinese companies could be collecting data on US citizens, US drivers, and sending that abroad. And so this is something that the Washington and White House would be looking to tackle. And again, this follows moves in other areas, and particularly on around EVs and tariffs. And so this is not a surprise. And again, this further discourages the idea of Chinese EVs companies ever thinking about coming to the US. And so this is very much, you see what the Chinese sector is trying to do on EVs, innovating, but one of the big marketplaces they can't get into is the US.
Yeah, certainly something to be tracking. And as well, there have been Chinese autonomous software companies looking to list in the US as well. So this could be something that really deters from that. But that was our Asia transport reporter, Danny Lee, there. Also, as well, some lines that are just crossing the terminal. This relates to the BOJ Deputy Governor Uchida speaking in Japan this morning, talking about perhaps this is the first time actually we've heard from BOJ officials post the decision, also amid all of this market volatility. But what we're hearing is that from Uchida is saying that they are not looking to raise rates when the market is unstable. Of course, that's quite a profound statement when you consider that the BOJ, perhaps the timing of that decision last week, and badly timed when you came into those jobs numbers as well from the US and those concerns around recession, the outlook for the Fed, that's been sort of blamed for part of this sell-off here. Yeah,
quite some dovish comments, in fact. I mean, the need to keep easing firmly for the time being, to adjust the degree of easing if the outlook is realized. So they're certainly trying to restore a bit more calm across these markets after what was one of the most tumultuous sort of sessions that we saw on Monday, the worst that we've seen since Black Monday of 1987. And this comes after that meeting, right, that you had that united front with the Bank of Japan, the Ministry of Finance, the FSA, all trying to have this sort of stability symbol here, that they're, they have each other's back right now. So we're going to see a bit more of those assurances here for the market. Whether that works, well, seems to be. There you go. The Nikkei 225 reversing some of the earlier losses here already. We're seeing 1% gains. Topics is up another 2% here today. Dollar yen, there you go. You're seeing that spike up right now, 145.61. levels.
And actually something else to note as well, just the volatility in the Nikkei gauge, because that's something that really spiked, and you are seeing that pulling back around this announcement as well.
All right, some other big corporate stories that we're watching for you today. Disney shares close higher in New York after the entertainment giant announces raising the prices of its streaming services. The price for its cheapest offering, Disney Plus with advertising, will climb 25% to almost $10 a month. Disney Plus without ads will cost nearly $16 a month. That's marking a 14% increase. The changes will take effect on October 17th. Airbnb shares fell sharply in extended trade. That's after a disappointing outlook for the third straight quarter and a warning of slowing demand from U.S. travelers. Airbnb says it expects sequential moderation of growth on the key metric of nights and experiences booked in the current period. And coming up, a former advisor to President Barack Obama joins us as the race for the White House tightens. We're going to get insights from Amy Dacey of the American University's Sign Institute next. This is Bloomberg.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He sat at his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends.
That was the Minnesota Governor Tim Walz speaking in Pennsylvania after he was introduced as the Democratic Party's candidate for vice president. Let's get to our guest, Amy Dacey. She's executive director at the Sign Institute of Policy and Politics at American University. She previously advised President Barack Obama and Senator John Kerry and served as CEO of the Democratic National Committee during the 2016 campaign. Amy, thanks so much for joining us. And we were just hearing that you've actually met Walz personally over the years. He's someone who's not extremely well known to the American public. So what's your experiences of him and his dealings?
Listen, this is a very authentic individual. You know, if you've met the governor, you know where he stands on the issues. He's been consistent over the years. I think he's incredibly approachable. He's likable. I've always found him to be, you know, enjoyable. And I think he works hard. He takes service very seriously. And you can see that throughout the course of his life. He's very well liked, certainly with his former colleagues in Congress. Other governors certainly love working with him and find him, you know, somebody really interesting and good to work with and collaborate on. And so I think when he introduces himself to the American public, they'll see that as well.
What do you think he can bring to the ticket? You know, obviously he's got that Midwest sort of, you know, image. Is this some way, a way to neutralize really what we're hearing from the Republican ticket and what, you know, J.D. Vance as their running mate?
I think that the you know, Harris-Walz ticket is a very striking contrast to the Trump-Vance ticket that was announced at the Republican convention. I think the profile of Governor Walz certainly complements and suits well with Vice President Harris, not only in the positions that they work on together and believe in together in their vision for going, you know, toward the future, but here you have an individual who comes from humble beginnings, is in the Army, you know, National Guard for years, really ran in a rural conservative district in Minnesota. He's a former NRA member. This gentleman was a teacher. You know, he was a high school football coach. He's from the Midwest. I think he resonates a lot with those individuals. And yet he also takes on really challenging issues while he was governor, whether it was historic investments in education or protecting personal freedoms. He's done a lot to expand workers' rights, protect the environment. These are all the top issues that they're really talking about in the Democratic Party. And I do think can resonate with not only the Democratic base, but also these independent and non-committed voters that are still out there that they have to reach before they vote.
From a Republican perspective, they're looking to brand Tim Walz as someone who's a dangerously liberal extremist, and I'm actually quoting the campaign there in a statement. How likely is that message going to resonate with swing or undecided voters?
Well, you know, I challenge them to do that. I'm certainly think they're going to try. But here's somebody who definitely has been a champion on some really important issues to the progressive community. But he's also somebody who's governed in, like I said, a rural conservative district in Minnesota. These are one of those districts that voted for Barack Obama for 2, cycles, but then, voted for Trump for 2 cycles. And yet he was still able to win re-election in that kind of district. I think he's somebody who listens to individuals. He also, understands those really important, kitchen table issues that people are talking about every day, the challenges that they face. He's faced them, as well throughout his life. And so I think he can really resonate. The Republicans are going to want to do that and show some, the investments. He's also done, incredible tax cuts, for individuals and working families. But he's also done a lot of growth initiatives in Minnesota, and especially on the economic front. So while they'll try to do that, I think it'll be a challenge for them with not only his profile, but some of the other issues that he's worked on.
And it's interesting that word weird has come up quite a bit. In fact, I think it was Walz that actually started, describing the Republican ticket as weird. And I think that really started, coining the term, and now the Democratic Party seems to be going with it. What do you make of that? I mean, it seems like, that was one of the reasons why, Harris did choose him, because he's able to kind of have a lighter touch against Trump in some ways without creating too much controversy.
Prairie populism, they call it, like that, kind of definitely can connect with people. I think that in a way he called out some weird remarks that certainly, Trump and Vance have made, that it doesn't seem to connect with everyday people. In the same way, though, this is not an individual who is being divisive and name-calling and bullying like we've seen with the other tickets. So while they're calling out some weird behaviors and certainly some weird ways to connect with voters, I don't think it's that visceral bullying that we've seen from the other side, and the divisiveness that we've also seen, sometimes from Trump and his camp and the campaigns he's led before.
Something else that's been picked up on is Walz's connections to China, which stem back decades. It seems like this could be sort of interpreted as a bit of a double-edged sword. On the one hand, you might appreciate as a voter that he has that experience and that connection and knowledge of Beijing. On the other hand, it could leave him open to attack from opponents. How do you think it's likely to be perceived, and how significant is it going to be?
Well, listen, I do think that, campaigns are about contrast. So his opponents are going to try and find things to try and show a contrast and show something that's divisive. But here's somebody who's got incredible amounts of experience, not only globally, but also nationally, at the federal level, at the non-federal level. I mean, if you put him next to a J.D. Vance and just try to compare their service record, where they've come from, the work they've done, the accomplishments they've had while in office, I think that's the contrast that you're going to see. That's what people are going to understand when they see these two candidates, out on the stump, if we get them on the same debate stage together. So I think those experiences that the governor has had both internationally, the relationships he might have, and then also all the work that he's done domestically, only strengthen the ticket as they move forward and show a striking contrast with J.D. Vance, who just really is nowhere near as experienced as this man to be vice president.
It's really just unprecedented times, just how quickly we've seen, a matter of weeks, that Kamala Harris has rallied this Democratic Party, how quickly she's found a running mate in some ways. I mean, are you surprised by just the speed of which this Democratic Party has recharged itself in some ways? And can they continue this wave until November? And what can they do until November?
Yvonne, we've been saying in the U.S. that July was the longest year in political history, right? So it's been a really unprecedented, month. And certainly since that first debate, things have changed, significantly. I think one of the things that many of us were surprised at, not only on the Democratic side, certainly the Republican side as well, is just the coalescing that the vice president showed around her, the way she took the initiative when she immediately announced for president, not only with the with President Biden immediately showing his support, but what you saw coming together with party leaders, state party chairs, individuals endorsing, but to see unprecedented amounts of money raised within the first 36 hours, to see brand new voters, brand new volunteers within that first amount of time, 58,000. And I think one of the things, statistics that was most striking to me, that initial money that was raised in that first 36 hours, 62% was from from new donors who hadn't given yet that cycle. So that enthusiasm, bringing new people, reassuring, people who are committed to a Biden-Harris ticket about what this Harris, Walz ticket could be going forward. They really have shown this coalescing. Now they're headed out on, a huge campaign swing going to very, important states in this election. You saw them on the stump together. They seem genuine together. You see this connection, and then they roll up into Democrats haven't even had their convention yet. This rally speech tonight had as much energy as some nights at the conventions, and I've been to most of them. So it's you show that enthusiasm. They'll be able to use the convention as another platform to talk about their issues, to talk about the differences with them and their Republican opponents. So there's a lot ahead, for Democrats to work with.
Amy Dacey, thank you so much. Executive Director at the Sine Institute of Policy and Politics at American University and a former CEO of the Democratic National Committee. We're checking these yen moves, of course, and continue to see that weakness. There you go. We're weakening about more than 1% here right now. This is on the back of the deputy governor of the Bank of Japan speaking there, saying they won't raise rates when markets are unstable. That certainly is a reassuring words there. That is moving dollar yen this morning. This is Bloomberg.
All right, some of the top geopolitical stories we're tracking this morning. A Nobel Prize-winning economist, Muhammad Yunus, has been appointed head of Bangladesh's interim government. President Mohammad Shahabuddin announced the decision after consulting the armed forces and protest leaders who called for Yunus to be given the role. Former Prime Minister Sheikh Hasina fled the country after weeks of protests. Hamas has named Yahya Sinwar as its new political leader, the alleged mastermind of the Gaza militants' October 7 assault on Israel. The choice sends a message of defiance to Israel and the US and is seen as a blow to efforts to broker a ceasefire. Meanwhile, Israeli forces have again exchanged fire with Lebanon-based Hezbollah. Israel's military says drones were launched into its northern western Galilee region, and several civilians were reported injured by an Israeli interceptor missile.
All right, checking these markets here right now. We're watching some particular stocks, and New Oriental is one to watch here. So they talked about they're expanding that buyback program. JP Morgan is calling the special dividend plan welcome news and likely going to be approved, just given the cash position that they have. So we're up 4% for that stock as well. Greater China markets are looking like this here. It seems like they are still doing decently well now that we have seen a little bit more calm come through in these markets here. But yes, we've been relatively sheltered. MSCI China is up 1%. Hang Seng also. We're 200 points to the upside here. And as we count down to the trade numbers, could that be the next hurdle? Obviously, that we're likely to see the export numbers look pretty strong. I mean, 9.5%. But then again, there's some base effects here, Bell, to deal with that are looking a bit more favorable for the numbers. Also, you take a look at some of these, export orders in the official PM9 numbers. South Korean numbers have also softened as well in trade. Maybe there's signs that things are cooling down a bit too.
Yeah, that's really what we're tracking. Those early indicators, you're seeing that overseas demand is starting to soften, and as you said, it's really those base effects that could be playing into those exports figures later. If you talk to our Bloomberg economics team, for instance, they're saying that these will not be enough to drive a faster GDP growth, and so the third quarter really looking set to repeat the pattern of the prior quarter when you saw that weak domestic spending, and that's really the focus in China. Weak consumers. They're not picking up enough. And again, yes, as you said, it really could have a big bearing on where Chinese markets fare in the session today. What else we're tracking, of course, is what's happening in Japanese equities this morning and Japanese assets broadly here, because you're seeing, wow, the Nikkei, the topics, both of those really picking up. We're seeing that volatility pulling back as well. Big moves in the Japanese yen. All down to what we just heard from the BOJ Deputy Governor just a few minutes ago.
Yeah, it was just about less than an hour ago when we were saying that, Japan was resuming declines. You hear what Uchida is saying, and he's basically saying, we're not going to raise rates when the market is unstable here right now. So, I mean, that maybe does add to a bit more calm into these markets, that maybe, the BOJ is not looking to hike rates anytime soon until maybe the dust settles here. But certainly, take a look at the yen. We've seen a weakening here of another 2% or close to 2% back to 147 levels here right now. The Topix is up 4%. Banks are doing still quite resilient and doing very, very well. But yes, this goes back to a lot of people were kind of finger pointing on what led to this whole market turmoil from the first place. Was it the fact that the BOJ raised rates last week that kind of started this unwind of the yen carry trade and the like? And it seems like right now they're trying to calm heads a little bit.
Well, I mean, when you think about the timing of the BOJ hike as well, it probably couldn't be much worse when you came up against those jobs figures from the US on Friday, concerns around recession that were building, calls around that, like Goldman Sachs, for instance, raising their forecast for next year, seeing a 25% risk. What's interesting, though, we've actually had a survey coming out this morning taking a look at what BOJ watchers are expecting around the trajectory of interest rates, and they've actually largely kept that intact. They're really seeing that you're going to continue seeing that policy rate rising through the end of the year. But we're going to have a lot more on the way in the coming hour. You're watching here the China show, tracking these markets. We're seeing that recovery extending as the morning session continues.
If you were looking for another day of maybe a turnaround, you got it. You take a look at how Asia is doing here right now. We're continuing to see the CSI 300 punching about 0.4%. Broadly speaking, though, you look at the region and you're basically continue to see these equity rallies take place for a second day after it was a quite violent turnaround already on Tuesday. And Japan, I mean, just kind of late in the game, but really those deputy governor comments really kind of correcting or at least reversing a lot of the moves that we're seeing earlier. Yeah, it really seems to have lit a fire under some markets here this morning, really tracking those moves high for the Nikkei 225. You're seeing volatility as well pulling back, weakness coming back into the Japanese yen, and of course continuing to track the direction for JGBs. Interesting to note as well, trading volumes, they're picking up around the region, particularly in Japan today. But as we said, it's that focus on what the deputy governor said. They're not looking to raise rates when the markets are unstable. Of course, a lot of the market action has sort of been pushed back onto that BOJ hike last week and the unwinding of the yen carry trade, what that's meant for US equities in particular, for selling of positions. What else we're tracking in the session so far? Again, it has been, as you said, Yvonne, that turnaround that's sort of picking up this morning. Also taking a look at how broader markets are faring so far. So the broader Asian benchmark up 1.7%. Again, we were in negative territory early today. US futures a little bit higher tier today as well. Continuing to track the gains we see for the Kospi, Taiwan, both of those up around 3%. Again, it is that story. Perhaps calm is being restored to some degree, Yvonne. Yeah, and we'll see how long it lasts. More in the market action. Let's bring in Mark Cranfield, MLI strategist, joining us now out of Singapore. It seems like all of a sudden the BOJ is your friend now, Mark, with these comments from the deputy governor. How much weight should we put on them?
Not too much. Clearly, the Japanese authorities are a little bit rattled by what they've seen in the stock market over the last few days. And that's not surprising. It's been extreme movements. And they did call that meeting yesterday between the Bank of Japan, Ministry of Finance and the FSA. And it did say that they would like to try and restore some calm. And so clearly, there's a little bit of backtracking going on here. Mr. Uchida is trying to put some calm into the markets by saying that the Bank of Japan wouldn't raise rates when markets are looking a bit disorderly. But traders will also know that there was very little chance that the Bank of Japan would do back-to-back interest rate hikes. That's not really their style. And when you consider how long it's taken them to do the two interest rate moves this year, and they were separated by 3 meetings anyway. So always, I think the game plan, if the Bank of Japan sees the data it wants, traders were expecting that there would be a move in the fourth quarter. It was very unlikely to happen in September anyway. So from that point of view, it's not really surprising. And of course, markets are likely to calm down before we even get to the fourth quarter. So in a way, it's probably overstating it. But markets are very nervous. You can see that they're with the kind of action that we've had over the past week or so, that people are very skittish. They're willing to jump on anything. And you'll always have people, day traders especially, who will jump on a statement just for the next couple of hours. They don't need to see what's going to play out over the next weeks or months. So this kind of erratic movement we're likely to continue. And before long, people will pass by, and they'll be much more focused on the US CPI data, which comes out next week. That is clearly the biggest thing on the horizon, and that will determine by how much the Federal Reserve lowers interest rates. So before long, people will be looking towards Jerome Powell and what he has to say and how far the Fed is going to move, and that will be a bigger factor for financial markets.
But it is sort of that story, Mark, again, of the BOJ, and even if you're saying, yeah, perhaps we shouldn't put too much bearing on those comments, given we weren't going to be seeing those back-to-back hikes, but the BOJ coming up against the Fed, and that's sort of what happened last week as well. And there's all that concern around yen-funded carry trades. How much further do you think that has to unwind?
Well, we had somebody on television here yesterday from JP Morgan saying that they think it's about halfway done. Which is a reasonable estimate. We've also got our Japanese economist saying something similar as well. He's analysed the data going all the way back really into the 1990s. There have been some very significant, over the past couple of decades, there have been some very significant moves in the yen. Of course, around the collapse of LTCM in the late 90s, around the global financial crisis. And if you look at the unwinding of those, this is beginning to look something similar to that, and it suggests that it isn't over yet. And if you look at the way also the positions are being cut, especially the forwards market is a very good indicator of just how severe changes in the direction of the yen are. And if you look at what's happening there, it's pointing towards spot dollar yen going back to somewhere where it was in the first quarter of 2023. Well, that's below 140. That would suggest that the new stabilization level for the yen is somewhere between 135 and 140, somewhere in that range. So on that basis, there's still further to go. And it's pretty unlikely that everything would have been cleaned out just in the space of a few days. So over the next few weeks, we'll probably see a bit more unwinding. We'll see a lot more intraday volatility. That's something we'll have to get used to. But it looks like the end game is going to be that dollar yen settles in a lower trading range than we've seen for this year, and probably somewhere closer to 140.
All right, that was Bloomberg's MLive strategist Mark Cranfield there. Let's bring in Carlos Casanova, senior Asia economist at UBP. And Carlos, Mark sort of poured a little bit of cold water on the enthusiasm there from traders, at least, around the Deputy Governor's comments from the BOJ that they wouldn't be looking to raise markets when it's unstable. The fact, though, that they had to come out and say that tells us that perhaps a lot of people were spooked by what the BOJ did last week.
Absolutely. So I think we were also spooked. I think everyone was a bit surprised by that hawkish pivot on all fronts. So on the tapering front, it was more aggressive than expected. The 15 basis points was higher than expected. Up until the eve of the event, when the details were leaked, the market was expecting 10 basis points, not 15. But what spooked investors the most was forward guidance by Governor Ueda. So he did say that the 0.50% barrier is not an obstacle for Bank of Japan. They have the right to hike interest rates even without full visibility on the macro front. I think that's what was extremely hawkish for us, and that's what we are seeing Bank of Japan backtracking on right now. So it will continue to be data dependent, more so than perhaps it has been so far this year.
What's going to be the key driver for dollar yen then? Is it what the BOJ actually does, or does the Fed have more weight, just given what we've been seeing in swaps and what markets are pricing in now?
That's a really good question in the context of this yen carry trade unwind. 15 basis points doesn't change much fundamentally, so too bad. The rate is now 0.25% instead of 0.10%. So I think it's a combination of expectations that terminal rates in Japan would move towards 1%, but also the market pricing in a lot more aggressive Fed cuts throughout 2024 and in 2025. Is a combination of those two factors that make the carry trade look expensive, and so some people with very leveraged positions would have had to unwind that very quickly. We've heard a lot of commentators saying that we're 50% done. If you look at the Commodity Trading Future Commission, they also have similar figures. It's impossible to calculate, but I don't think that the pace of the unwind going forward, even if we do have further tightening in Japan and easing in the US, is going to be as quick as what we have seen over the past few weeks.
Why do you think Ueda seems to have lost his approach on patience? He's been so patient for such a long period of time. Why do you think there's been that rush if you're saying that hikes aren't being supported by the underlying data?
I think there are two factors. First of all, Ueda intellectually is quite keen on moving away from unorthodox, ultra-accommodative policies. And so he is going to be quite impatient in moving in that direction. It's Japan, so it is a Confucian society. So although it's a voting process, it's very unlikely that some of the other members of the Monetary Policy Committee are going to contradict Ueda. So he has quite a lot of say in the decision-making process. And of course, he wants to be the one that hikes interest rates. So he is quite keen on that front. The other point is in terms of potential risks to the global financial system. It is quite likely that the Fed and the Bank of Japan have been aware of the size of this carry trade. And so he was under pressure to basically deliver this rate hike, even with lack of visibility on the wages front.
You mentioned about the Fed. Obviously, this got, what we saw from the CPI report, the jobs report. Now we're thinking, the narrative seems to be dominated by we're going to head into a recession. Are those fears overblown?
Recessionary fears are overblown. Unemployment did pick up to 4.3%, but that is still below the full employment rate for the U.S. So we are still not at 4.5%, meaning the economy is still at full employment. It's still in overheating territory. I think what we should prepare for is a move away from a no landing scenario to a soft landing scenario. And the Fed will have to act preemptively to avoid a hard landing scenario. That is guaranteed and is being priced in the market right now. Recessionary fears are overblown. We are seeing some weakness in consumption, but it's going to remain around 1.6% in the second half, which is by no means a recessionary outcome. So I think fears are overblown. It's a soft landing scenario that we need to price in.
Soft landing, then. What does that mean around the outlook for rate cuts? Because you've got people this week that have been calling for an emergency rate cut. It probably seemed a little bit unnecessary, but what are you expecting?
We are expecting 2 this year. The December rate cut, 25 basis points, can be justified by cooling in inflation towards that new implied tolerance level of 2.5%. We won't be there by September, so September hinges on a further weakness in the labor market. I think the conversation at the Jackson Hole Symposium will be whether or not they deliver a 25 or a preemptive 50 basis point rate cut. And that will depend on whether or not inflation shows signs of cooling and also whether we see further weakness in the labor data.
Yeah. Does it open the window wide open now for central banks here to cut?
Yes and no. We are seeing cautiousness. The RBA yesterday said that they still had to keep things quite tight because inflation is not quite there yet. So I think it potentially opens the window for some central banks like India to deliver a cut in the fourth quarter. But I think it will take longer for banks like the RBA to deliver stimulus. So first quarter of next year is still what I have planned.
China as well, because we're in the window now for trade numbers to drop. Exports could see a bit of a pickup, but what are you expecting there?
Trade is going to become a drag in the second half. Maybe not a drag, but at least less of a tailwind. As U.S. demand has shown signs of cooling over the summer months. Whether or not the data this week reflects that is a different story, but we do think that is not going to be a tailwind for China in the second half.
All right, Carlos, got to leave it there. Thank you, Carlos Casanova, senior Asia economist at UBP. Coming up, Kamala Harris taps Minnesota Governor Tim Walz as her running mate, seeking to broaden the Democratic ticket's appeal. The latest in the race for the White House next. This is Bloomberg.
To the general election and win that. And to all the friends, listen, we also need to level set. We are the underdogs in this race. But we have the momentum, and I know exactly what we are up against.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He set his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends.
Vice President Kamala Harris and her running mate, Minnesota Governor Tim Walz, speaking at the campaign rally in Pennsylvania just a few hours back. Let's get to our news desk. Editor Jill Deese is joining us now for more. We know who this Democratic ticket is now. What ultimately do you think was the deciding factor of why Harris chose Walz?
Well, Yvonne, it seems like this is really a coalition building kind of ticket, right? Because you have in Kamala Harris, the current vice president, she's from California, prosecutor, kind of brings in that coastal vote there, certainly. But with a candidate like Tim Walz, you have somebody who's, this big Midwestern dad kind of charisma. You've got somebody that also has concentrated during his time in Congress and as governor on working families issues, labor issues, union types of issues. As governor, he's looked into things like child tax credits. He's also provided free school lunches, that kind of thing. So you've got that level of kind of commitment there. And then also in Congress, he was focused much more on issues involving veterans, agriculture. So it does seem like what Kamala Harris is trying to do with this ticket is really appeal to more Midwestern voters, try to build that coalition and ultimately win over votes in those types of states.
Yeah, just how important is he, do you think, going to be in getting those swing state voters over the line?
Well, historically, the VP pick hasn't really had a tremendous effect on the ticket, but ultimately, you kind of want to do no wrong here, right? So anything that Kamala Harris can do to kind of build that kind of appeal there, maybe that ultimately helps, with her polling in some swing states. We'll have to see whether or not the VP pick here has any effect there. But when you're contrasting this with, the Republican contender Donald Trump, who in picking J.D. Vance, senator from Ohio, kind of doubled down on his base more than built out any kind of, broader coalition building here, then you do have what seems to be a different strategy there in trying to really, really try to win over an appeal. Obviously, Kamala Harris, though, is running a very unusual and really kind of unprecedented campaign, trying to get things going the last 100 days. We'll have to see whether that actually has any big effect there.
We talked earlier about his China connections. Might that be a bit awkward, just given what we've seen? And they're talking about comments from just decades ago about when he was a teacher in China, too.
Yeah, it's really interesting to see, this candidate that actually has experience living in China. We really haven't seen this since George H.W. Bush, who was ambassador in Beijing in the 70s. In Tim Walz, he was a teacher in China, 1989, 1990. He celebrated his wedding anniversary on the anniversary of the Tiananmen Square crackdown. Has met with the Dalai Lama. Maybe there is a bit of awkwardness or tension there, but ultimately it seems like, he largely kind of tracks with the Biden administration's positions on China anyway. This idea of taking a really hard line on issues involving the military, South China Sea, technology advancements, that kind of thing, while trying to find areas of cooperation, maybe in renewables, green energy, that other sorts of thing. We'll have to see what he actually presents as a candidate and what his comments look like now today on China.
All right, that was our Bloomberg News Desk editor, Jill Deese, there. And of course, Yvonne, it's really that question, what are we hearing about this on social media within China as well, because it has been something that's been stirring a little bit on the rounds of Weibo, people discussing, as we said, that experience that he has in mainland China. The hashtag, actually, that translates in English, Harris's running mate has taught in China before, which to me just kind of sounds like, okay, it's a bit of a fact, but
it's too long for a hashtag,
it is still generating a lot of views, 10 million clicks so far. So people are definitely interested, it seems.
Yeah, obviously the China ties are interesting, right? What we've heard so far are some mixed reactions. So some are a bit skeptical. They're saying Walz can help improve U.S.-China relations. It does not affect his anti-China stance, though. And then also the candidate's time in China was very different. I mean, you're talking about, the 90s, right? 1989, 1990, when he was there. The atmosphere at that time was different. It may not have a positive influence on him.
Yeah, and I think as well, what we're hearing really from both sides of the spectrum, Democrat or Republican, is that tough on China stance that's likely to at least persist into the election. And even the story today, for instance, we've been confirming here is that the Biden administration is looking to further restrict US sales of Chinese vehicle software as soon as this month. So really there's a lot to play out on that front as well.
Yeah, some still keeping the faith, though, saying, I hope this is positive for US-China relations, just having someone with those ties to China as well. So, yeah, that's what's been the chatter on social media here this morning, of course, on this Democratic ticket. We've got plenty more coming up. Checking markets, of course. This is Bloomberg.
Welcome back to the China Show. Here are some of the big stories that we're following from around the world this morning. And Bloomberg has learned that the US officials plan to propose limits on sales of Chinese vehicle software as soon as this month. Sources say the move will include curbs on the use and testing of Chinese technology for autonomous vehicles. The restrictions are meant to keep Chinese companies from collecting data on US drivers, as well as building a bigger foothold in the American market. Nobel Prize-winning economist Muhammad Yunus has been appointed head of Bangladesh's interim government. President Mohammad Shahabuddin announced the decision after consulting the armed forces and protest leaders who called for Yunus to be given the role. Former Prime Minister Sheikh Hasina fled the country after weeks of protests. Hamas has named Yahya Sinwar as its new political leader. That's the alleged mastermind of the Gaza militant group's October 7 assault on Israel. The choice sends a message of defiance to Israel and the US and is seen as a blow to efforts to broker a ceasefire. Meanwhile, Israeli forces have again exchanged fire with Lebanon-based Hezbollah. Israel's military says drones were launched into the northwestern Galilee region and several civilians were reported injured by an Israeli interceptor missile.
All right, take a look when it comes to markets here right now. We're watching Greater China, just given as we count down that trade data. But yes, we're continuing to see these gains in offshore markets here today, doing a little bit better than what we're seeing in Shanghai. So 1% across the board when it comes to Hang Seng H shares as well as H's Tech. We're a little bit weaker on the dollar, the renminbi side of things here. But obviously, what's been tracking with the yen, given the weakness that we've seen it basically weaken more than 1% on the back of those deputy governor comments from the Bank of Japan saying they're not likely going to raise rates when markets are unstable. So that certainly is sending some good vibes into these markets here. We're also watching some of these chip plays as well, Samsung, SK Hynix in South Korea. So there's a Reuters report saying that a version of Samsung's 5th generation HBM3E chips has passed NVIDIA's tests, citing sources there. So they have yet to sign that supply deal, but could be happening soon, according to Reuters there. So you're seeing the stock flying there some 4% this morning. Still watching those Japan banks as well. You take a look at how the Topics Banks has done in the last 2 days, and we're seeing probably one of the best 2 days we've seen in about 8 years or so. So there you go. The likes of Sumitomo Mitsui is up some double digits here right now. So continuing on to see maybe some dip buying in some of these financials this morning. And SoftBank coming up as well. Those earnings, how does it all play out here today? Obviously, there's a lot of questions about Masayoshi Son's AI ambitions and the like here. But yeah, there you go. The stock's up some 6% right now leading up to that.
As well, think about that route that we've seen, because we actually saw the stock plunging Monday by the most since 1998. And if you continue to see those wild sorts of fluctuations, is it going to be hurting something hurting its ability to secure financing for the company? But that focus coming down to earnings that are due later, as you said, the expectation is we're going to see net income of 1 billion yen. That's around $7 million. So a very small profit, but it is really an indication, as you said, that focus on those bets that Masayoshi Son's been making, some of those failures, and as well, we know that he's preparing to deploy that major cash pile, another big bet in the AI space ahead. A quick look at GMM function, given we are just seeing that recovery continuing to take shape in Asian equities so far this morning. Again, lots of green across the screen in equity markets at least. You've seen the likes of the Topics here on TAIEX rising. We will have more ahead.
Yeah, but it's interesting, right? You take a look at how things have come. I mean, we talked about the Wall Street session and the U.S. really joining in on this global rebound. And as Stephanie Leung from Stashaway has said, a 10% correction in U.S. markets is actually healthy. So they're still looking pretty positively around that space. AI, they say, is still going to be one of those key trades for them. But yeah, the dollar is getting a bit stronger in this Asia session. Yields are also still ticking up higher here. That's despite, look at New Zealand. We're up some double digits here. But that's despite that jobless rate was actually not as high as thought. So there is a whole question of whether the RBA, RB and Z, are they really that close to actually rate cuts? Maybe not.
Yeah, well, I think that was what the point that Carlos Casanova was just making to us at the top of this hour. It's that sort of caution that we're hearing coming through, even though we're perhaps thinking that central banks do have more room to ease. Now that pressure of dollar strength sort of seems to be in the rearview mirror. But more ahead, this is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets heading to lunch break, and yeah, they definitely saw a whipsaw the last few hours or so. You take a look at what's been going on with the Nikkei. So we were actually starting the day in negative territory, and then the deputy governor of the BOJ stepped in and really tried to reassure this market and saying, look, they've met with the Ministry of Finance, with the FSA yesterday. They came out with this united front saying that they're looking to calm markets. And yet that line saying no rate hike until maybe financial markets stabilize, or they're not going to unless this stability does not last. So certainly that's one thing that's helping to lift stocks here this morning. The topics we talked about, those banks doing quite well, and dollar yen. We're off some of the highs of dollar yen here right now, but we're still talking about 146 levels.
Yeah, and speaking of the BOJ, because we heard earlier from Christopher Willcox, his executive officer and head of wholesale at Nomura, he actually said that last week's rate hike was appropriate, even though, of course, there's been a lot of concerns at the timing of it in markets. But Willcox spoke to us about the BOJ's rate path and as well what is ahead for the Japanese yen.
I think there was pressure on the BOJ caused by dollar yen. However, many people have questioned whether the rate rise from the BOJ was a mistake and whether that's led to some of this turmoil. I would say that the BOJ has been completely vindicated because, firstly, it's proven to us that unwinding a very easy policy over a long period of time is likely to be a bit bumpy. So we've had this extraordinarily easy policy to deal with the deflationary environment. It seems like the deflationary environment in Japan is being dealt with. But they always knew that this unwind was going to be very difficult. That's why they've been so slow and so cautious. And yes, that puts some pressure on the yen for a little while. But I think it's right. And think about the carry trade. The point of the carry trade is that if they didn't start to move, the carry trade would only have got bigger. And so the end disruption of the unwinding of the carry trade would have been even bigger. So I think the BOJ is playing it extremely smartly.
Chris Willcox there, Nomura's executive officer and head of wholesale. And it brings us more discussions about where we are in this yen carry trade and the unwind of it, the fierce one that we saw this week. Bloomberg Economics says, look, it looks like the pace at which we're seeing it is really reminiscent of what we saw back in 2007. Let's bring in our senior Japan economist, Taro Kimura. He's with us from Tokyo. We also have our opinion columnist, Shuli Ren, who says that the worry now is that this could wreck investors' frothy exposures to U.S. tech and AI. Taro, I'll start with you. You've been kind of digging into a lot into the numbers, the research. It's hard to really track how this yen trade, carry trade unwinds, but what are you seeing? Where are we now?
So yes, there's no definition of what is the yen carry trade, and there's no data that capture the accurate size of the carry trade. That said, what we know is carry trade is about speculation. Speculation for the yields differential is going to continue, and the yen is going to get weaker and weaker. So there should be a correction moment. We don't know. We didn't know where it would be, when it would be. But this is what we are seeing right now. And so what we had seen in 2007 and also 1998 was the trigger was some onset of some crisis of subprime loans or long-term capital management funds collapse. What we have seen so far is just bad data from U.S. macro, and it's not a sign of a crisis. So therefore, whether the carry trade unwind continues further depends on how the U.S. macro data and economy will evolve.
And Tara, we just heard there from Nomura's Chris Willcox. We heard a similar view echoed from Carlos Casanova from UBP at the top of the hour. The BOJ is really aware of this carry trade and the possible impact, even if there's not the exact data on the size of it. But how sensitive does the BOJ need to be?
Right. So the Deputy Governor Uchida just mentioned that the stronger yen is actually more or less deflationary. So therefore, if this continues to the yen's jump continues, this will affect its policy decisions. That said, the baseline from the Bank of Japan is they are confident on the domestic progress in its inflation and growth, and also Uchida, the deputy governor, who just spoke, underscored that it's confident that the U.S. economy will head to soft landing. So therefore, the message from the BOJ so far is they give a dovish put that they won't hike as long as the market is unstable, but they will go back. They may turn back normal if the market gets back its stability.
Julie, how big are these carry trades really?
That's a question that everyone wants to know the answer to. No one knows because currency trading is not done on exchanges like stocks are. But I did try a little bit. Like if you look at Japanese banks' foreign lending, it has hit 1 trillion yuan at the beginning of the year. And that's like about 20% jump from 3 years ago. So it's a lot of money. And we all know that, this take out yen loans to buy U.S. stocks can be very popular with private banking clients because what Tara was saying, short yen was such a big one-way bet and the long U.S. big tech, right? So people have done a lot of amateurs, I would say, millionaires perhaps have done a lot of those carry trades.
And it's not just about U.S. tech stocks. Talk to us about the structure of this, because there's the concern that part of the forced selling was because there were some more illiquid positions that the yen carry was also being used to fund.
Right. So like a shorting yen and the buying Mexican peso, it was also very popular because, it's in a way a bet on the U.S. election, which people really follow very closely, right? And then when the carry trades turn south, brokers will ask clients to take out margin calls. And for them, there's a lot of selling pressure, and they will tend to sell the most liquid positions. And the U.S., U.S. big tech is a very good candidate for that.
All right, perhaps a bit more to go on this one as well. That was our Bloomberg opinion columnist there, Shuli Ren, also our senior Japan economist, Taro Kimura, over in Tokyo. Thanks so much for both of your insights. We'll have more ahead. This is Bloomberg.
Well, the Adani Group says it's planning a 150% increase in its output of solar panels by 2026 to bolster India's carbon net zero target and reduce dependence on Chinese firms. Today, in our exclusive look inside the Adani Group, we meet the man overseeing their energy business. Sagar Adani is a nephew of billionaire company founder Gautam Adani and one of 4 descendants handpicked as the next generation of leaders. We asked him about the green ambitions of a company better known for its coal business.
These workers are braving summer temperatures of over 40 degrees Celsius in western India, putting up rows of solar panels and giant wind turbines. This dusty and once barren salt desert is set to become one of the world's largest renewable energy parks, 5 times the size of Paris. This is being developed by India's biggest coal importer, the Adani Group, as it tries to align itself with the Indian government's climate goals. Tasked with meeting this challenge is Sagar Adani, nephew of Indian billionaire Gautam Adani. Though still in his early 30s, he's already spent nearly a decade at the Adani Group. As part of a succession plan envisaged by his uncle, Sagar is now in charge of the group's lucrative but contentious energy business. He also oversees finance for the whole group, which means he's well placed to answer the many questions investors still have about allegations made against the group last year by short seller Hindenburg Research, which the Adanis have denied. Bloomberg's Anto Anthony put those questions to Sagar in this exclusive interview.
When the Hindenburg report happened, a $150 billion wipeout happened in the group's wealth or the family's wealth because the institutional shareholdings in these companies were very low, I am assuming. Is there any other reason which you can think of?
So that is a perception that is very different from reality. So of course, at that point in time, I would say that this report came as a shock to many people who were not expecting anything of this sort. From our viewpoint, purely, this report was nothing but accumulation of everything that was written and alleged over the last 10 years before that. but also very beautifully gift wrapped and presented in a way that was, explosive and shocking, so to speak. So at the end of the day, if we are able to deliver our business in a consistent manner, after the Hindenburg report, right, we delivered the best results that the group had ever delivered in the history of the group. As far as institutional shareholding goes, people don't understand this, but we probably have some of the most diverse institutional shareholding, long-term equity in our portfolio compared to any other global businesses, or certainly most of the businesses domestically. We have long-term players like QIA from Qatar, sovereign wealth fund. We have sovereign wealth funds that participate with us. We have strategic equity partners who participate with us, Total Energies of France. We have a lot of other smaller institutional participants in our ecosystem. We have corporates like IHC, which are some of the largest companies in the Middle East who participate together with us. We have participants in our portfolio and our platform across every single type of investor base that there exists in the world. So yes, there were concerns. We sat down with our partners, we explained to them in terms of what we actually do, what the real factual situation is. And once they understood, they were comfortable. And those same partners who there were allegations that they were worried they don't participate with us anymore, strategic long-term global equity partners, they've only doubled down since the Hindenburg report came.
If I'm looking over the last 5 to 6 years, we see a 20 or 30-fold surge in the group's market cap. What explains such a huge premium for infrastructure companies? What are you offering investors here?
So today, you look at it as a significant premium for an infrastructure company. We look at it from our perspective as these infrastructure platforms available for investors today at some of the lowest valuation multiples anywhere in the world. So us knowing the company's growth path, knowing what we're executing on already today with our known projects and our committed investments, over the next 3 to 5 years, the growth that every single one of these companies will have will means that investors participating in our listed companies today have access to this opportunity at some of the lowest growth adjusted multiples anywhere in the world. So we look at it the complete opposite way as what the perception of yours and market perception is. But overall, ultimately, what are we offering to the investors? We think that we have a once in a generation opportunity of investing significantly in the type of assets that have long-term 35-year, 40-year stability. The assets we invest in, ports, roads, airports, railways, renewable power, thermal power, transmission lines, distribution companies, data centers, all these assets are long-term assets.
Why are the analysts not able to understand your business models? For instance, if I'm looking at some of the Adani Group companies, there is absolutely no analyst coverage or just 1 or 2 analysts are tracking it. Where is that disconnect coming from?
So always, whenever you see analysts in the context of the country, they have never seen before a platform of infrastructure growing at the speed that we have been growing. There has always been a mindset of, analysts have many times covered various companies, right? Government companies, infrastructure. There's no other private large infrastructure platform in the country. So analysts have been looking at various other companies where there's a 10%, 20% year-on-year growth, quarter-on-quarter growth. Many times, the investors that they cover are also investors who are quarter-on-quarter, 6-monthly, year-on-year investors. We don't offer anything to our investors on a quarter-to-quarter basis. Our assets are 30 years, 40 years, 45 years. So our target investors are not ones that look at quarter-on-quarter results and determine investment potential. Our target investors are ones that look at a 10-year horizon, 20-year horizon, 30-year horizon. And analysts in India have historically not covered that. When I say all this, we also recognize that it's our duty to make sure that we engage with the analyst community much deeper, much stronger. We're already doing that. So you will see that a lot of analyst reports have come out over the last year and a half, which were not there earlier. Global companies like Cantor Fitzgerald, some of the top investment banks in the US, Jefferies, many of the Indian analysts, Sunidhi, Ventura, they've all started to cover us, which they did not a year and a half ago.
There is a long-running allegation against the group that the family is holding much higher stake than it is disclosing through overseas entities, and the real public float of the company is lesser than what it claims to be. How do you address that concern?
See, such stupidity does not even deserve an answer, to be very honest with you. For us, we're working in a regulatory context of SEBI, in a market like India where everything is fully publicly disclosed. These allegations have been there over last many, many years, many, many months. Every single regulator of multiple jurisdictions has looked at everything multiple times and has found nothing.
And if I may ask, the US DOJ investigation, which has widened of late to figure out whether group-related entities or people have paid some bribes in India. This is a news that Bloomberg had reported. Now, this is a business which comes under your purview. Do you know anything about this?
So we, as a company policy, don't typically respond on legal or quasi-legal matters. We made a public statement about this overall anyways, that if there is even an entity that looks at it, it's in due course of their regular business and their regular interactions. So there's nothing specifically in particular that we have to disclose to the market that's separate or in addition from that.
There seems to be a widely held perception that the group's fortunes are very closely tied to Prime Minister Narendra Modi's. How do you address this concern?
See, I think there is a very strong difference between perception and factual reality. People's perceptions beyond a point we can't do much about, but if you look at factual reality of what we've done across the group, right? Majority of our growth period as the Adani portfolio of companies and the Adani group overall has come prior to the, if you look at pure, growth of businesses, growth of assets, growth of cash flow, a predominant foundation of that, majority of that has come prior to the time of Prime Minister Modi. Even today, when a certain party is in power, we work in 22 different states all across the country. Most of those states, many of those states are non-BJP states, right? Ultimately, what people don't realize outside is that from a business perspective, most of the businesses is done in the states, not in the center. Most of the action, most of the growth, most of the assets, most of the concessions happens at a state level, where there is regional parties, where there's opposition parties, where there's the same party as the ruling party in the center. And we work across all different political parties because the thing that we fundamentally do is infrastructure. And for that, an alignment with the objectives of the government is very, very important. And that's the fundamental success story that we've had over the last 30 years, not the last 10 years that Prime Minister Modi has been in power. It's fiction or a fairy tale that a company can grow so big in 5 years or 10 years. Nothing like that exists anywhere in the world.
Are there any specific plans to phase out the coal business in line with the targets which government has set? Any specific plans or any specific timeline?
So we will, of course, follow the government's guideline in terms of what the country needs. So in sync with that, whatever we need to do, we will do. But of course, our predominant focus is on renewables, is on sustainable energy. And with a significant push towards that, whatever we do with other sources will be a very, very small proportion of the larger context of how we invest.
So in line with the government's current projections and roadmap, what is the timeline within which you are looking at phasing out the coal?
So government's looking at a gradual ramp down until 2060. So we have a lot of assets where we have PPAs and we have obligations in which we have to supply to various state government discoms, central utilities, and to many discoms and to the end consumers ultimately. So those obligations, contractual obligations, of course, have to be met. Our thermal platform is completely ring-fenced. It's completely independent. So with the cash flow that that company generates, that company takes its independent call with regards to how it wants to invest its own cash flow. Some of it they'll use for growth, some of it they'll use to distribute. But again, all of those plans are going to be dependent on the demand profile of the country. So ultimately, if there is a significant demand further, if the country requires it, if the people require it, and if the government requires it, that company will make its own call. But from a family perspective, when we look at a larger investment portfolio, whatever the thermal and the fossil fuel business does is going to be a small proportion of our investments in the entire sustainable value chain.
Once Mr. Gautam Adani steps away, we wouldn't have anybody who can take a final call on things. It's a joint decision making from what I understand. How will that work out?
So already there is a very, very close interaction between all the, so to speak, G2 members. We have our regular meeting cadences. We meet in a very structured manner once every week. We make sure that all important decisions are all socialized, are all discussed jointly, and there is in different aspects, different people take leads, but everyone's views are always incorporated in however we do everything. So that's something that we have already been practicing over the last about year and a half, and that's something that's becoming deeper and deeper and deeper as we move forward.
That was our exclusive with Adani Green Energy's Executive Director, Sagar Adani there, and we'll have our special coverage of the Adani Group extending across the rest of this week. Tomorrow we hear from Jeet Adani, who's Gautam Adani's youngest son and who's overseeing India's biggest network of privately operated airports. And don't miss, of course, the coverage culminating with a special report on Friday. That's at 11:30 a.m. Hong Kong time. The encore presentation taking place at 7 p.m., which is 4:30 p.m. in Mumbai. We'll have more ahead. This is Bloomberg. All right, taking a look at how markets are faring this morning. And again, we had turnaround Tuesdays extending into Wednesday so far. We did actually see a bit of weakness earlier today. It has, though, really started to gain steam, especially after we heard from the BOJ Deputy Governor saying that they wouldn't be looking to hike rates when the market was unstable. And so that's really just given perhaps a degree of confidence to investors this morning. We are tracking the Korean exchange in particular here. You're up around 2.5%, but set for the best two-day gain going back to November of last year. Important to note as well, because Korea hasn't really seen the same level of optimism this year that we've seen in Japan and Taiwan. And so the sell-off that we had was that much worse on the basis of that we hadn't seen that same level of run-up. But today looking a lot better. What else we're tracking so far are the chip stocks in particular. And again, this is another Korea story in particular, watching shares of Samsung in particular here, because we've got a report out from Reuters this morning. It looks like they're narrowing that gap in AI memory chips just a little bit more. So this is reporting that their HBM3E chips, which is their latest iteration, has been cleared by NVIDIA, something they hadn't managed to overcome that hurdle in the past. We do understand that their 12-layer version of those chips has yet to pass the controls. But again, optimism around Samsung in particular. SK Hynix had been a little bit under pressure, now turning positive though, Yvonne.
Yeah, we're switching from chips to now to cosmetics. Take a look at how Nomura Pacific is doing in Seoul. This is the biggest drag on the MXAP here right now. Basically, brokerages are calling it an earnings shock as a 94% miss from market expectations in the second quarter when it came to earnings. They're talking about sluggish business in China as one of the culprits there. We're sinking some 22% for the stock. That is a record drop for Nomura Pacific. We got plenty more coming up. Bloomberg Markets Asia is next. Stay with us.